It's that time of year again to track some of the big changes in super investor portfolios. In this video, I will be covering some portfolio changes for the third fiscal quarter of 2021, which goes from the end of June to the end of September. In this video, I will cover the portfolio changes for some of my favorite super investors to follow, including Pat Dorsey, Lee Lu, and Guy Spier. If you've had a chance to check out these 13F filings for super investors, let me know in the comments below what are some of the big moves that are piquing your interest as far as generating investment ideas. All right, let's hop into the portfolio changes for this quarter. All right, let's start off with the super investor that I've been following most closely recently, which is Pat Dorsey. He's based here in Chicago and has a strategy of a long-only global portfolio where he looks for businesses with durable competitive advantages that he thinks can grow at high rates for a long time to come. You might classify him as a growth at a reasonable price type of investor. That strategy is pretty evident here if you just look at some of his largest positions. So we can hop over to Ticker to take a look at all of the US positions for Dorsey. For instance, he has Facebook as his largest position. Of the stocks listed here, this makes up almost 20%. So it looks like he sold about 15% of his total shares in Facebook. I don't think that's anything to worry about or a point of saying that Dorsey is losing faith in the business. 15% sale sounds like something to free up capital to put more money into other investment ideas. Now the next position, Smartsheet, I did a little bit of a dive and first impression video over here if you want to check that out. But this is a software company, and on a percentage basis, even after his sale of about 13% from his position, it still makes up almost 17%. It almost matches his Facebook investment in size. This is an asset-light software as a service business that's, well, I'm still trying to figure out what's so sticky about this business and why he's making it such a large percentage of his portfolio. So he trimmed this a little bit, but he still owns over 2% of the entire company. So I would say that he's not losing faith by any stretch of the imagination in Smartsheet. Next up, he has Wix, the no-code solution to building websites. Here he's actually added pretty substantially, almost 35% additional shares. And this makes up about 15% of the portfolio positions listed here. Again, with Wix, we're seeing an asset-light company that's software as a service. You basically can build websites with Wix. Now, Wix operates in a space with a lot of competition. For instance, they're competing against WordPress, which is a behemoth. They're competing against Squarespace, Shopify, all these different platforms. To see him adding 35% to Wix is a good sign, and I should be doing a dive into Wix pretty soon, so stay tuned for that. Wix, along with many of his positions, have had a pretty tough quarter as far as results go. So we've seen Wix fall from about $2.90 a share till, if we go to the end of the quarter, to about $1.95 per share. He added a little bit to his PayPal holdings. It seems to be a pretty core position for him. PayPal has also had a pretty tough quarter, going from, again, $2.90 per share to about $2.60. And more recently, it's gone down even further. So I'll be interested to see how he has managed that position. I would bet he's held pretty much steady on it, but we'll see. Disney, which was a new position as of last quarter for Pat Dorsey, he added about 10% to that position. Disney has also had a pretty rough quarter. So it's gone from about 175 at the beginning of the quarter to about 170. So the third quarter has not been too bad. That's, basic fluctuations in stock prices. But it's really going to be the fourth quarter where we're going to see this pretty drastic drop in their share prices. It's currently at 153, and he bought it somewhere in the 170s to add to his position. We're seeing some sales from some positions that he's had for a little while. He sold about 30% of his stake in eBay and a quarter of his position in Upwork. He also has this core holding in Alphabet, which he really hasn't touched much. So as you can see from all of these positions, his main focus is on companies that can grow without spending too much money in capital expenditures. Most of these are software businesses. It's really hard to pick the right software business that's going to have an actual moat. But he is making a pretty spread effort to try to identify at least one platform that's probably going to grow a lot. And finally, this last position down here is called SEMrush Holdings, which is another software company that I have a video over here that you may want to check out where I do an initial deep dive into SEMrush as well. But he owns 11.5% of this company. So it only makes up about 5% of all of these listed positions here. But I would say that anybody buying over 10% of a company is pretty serious about that business. So I would say this quarter, if I'm going to look at any of these companies in more depth, it's definitely going to be SEMrush, Disney, and Wix. Those are the places where he's putting more money into, so that's where I'll likely check. All right, let's cover Guy Spier's changes for Aquamarine Capital. And this quarter, as you can see from the page on Ticker, it does list that he has 15 positions. However, he didn't make any changes here. So why am I even talking about this? Well, I was listening to a recent interview. He gave a masterminds talk in a group of some Indian investors. And he mentioned two interesting things that I thought I'd share. One is that he said his portfolio is about 20 positions. So there are 15 positions listed here on Ticker. So that means that we're missing around 5 positions that aren't listed. So that means that he could have positions in companies listed not in the US or that are too small to be picked up from any shareholder reports or trade reports in other countries. But we do know one of these positions, and that is Guy Spier made an investment in Prosus. If you don't know much about Prosus, I have a video over here sort of exploring the situation, but basically a huge part of Prosus's portfolio is Tencent stock. Prosus has a huge position in the largest Chinese tech giant. So now that Guy Spier has said that he has an investment in Prosus, that probably is going to be around a 2% position. I would expect something a similar size to what he has in his Alibaba position, which is about 2% of his portfolio. Now it remains to be seen what those other 4 or so portfolio positions out of the 20 are actually, but it's good to see that we have one concrete example of a new investment. Where Monish Pabrai goes, a lot of the times Guy Spier will follow. So this gives me hope that Pabrai has also made a new investment in Tencent. So it's possible that this position is listed on a foreign exchange. He may not have bought the over-the-counter shares that are available in the United States. So it may never show up in Ticker, but we'll just have to continue to look out for Guy Spier and any updates he has about his position. And I was really pleased to hear that he actually was talking about this, because a lot of the time super investors are not very forthcoming with their current portfolio positions. So it was good to hear from him. That was just a quick update about Guy Spier. I think that's pretty big news that he bought into Prosus, which basically means he's making a pretty big bet on Tencent. All right, next up, let's talk about Li Lu's portfolio changes for Himalaya Capital. Li Lu usually doesn't make a ton of changes to his portfolio, which is sort of the mode of operation that I think I'm definitely trying to strive for. So when he does make a change to his portfolio, I think it turns a lot of heads, and it's something that I'm certainly paying attention to. He only has one company that's not listed on a US exchange here, and that's his position in BYD, which he owns in the Hong Kong exchange. He has sold off some additional shares, about 13% here. He sold off some last quarter as well to probably try to capture the prices in BYD that were pretty astronomical at the time. Now, I don't really know the valuation, the appropriate valuation for BYD. I'm sure Li Lu does pretty much better than anybody else. He still owns 5% of that company. I'd probably get interested in BYD when he starts to actually add to that position again, if that ever happens. Li Lu's largest core US holding is Micron Technology, which is something that he shares with other investors such as Monish Pabrai, and he hasn't touched this for probably going on to a year now. This makes up 20% of these listed stocks here. And he hasn't touched it in a while, and I wouldn't anticipate that he's going to sell out of this position anytime soon. He's got some other core holdings that he really hasn't touched, Bank of America, Google, Facebook, Apple, and he has a small position in Pinduoduo. That's the biggest surprise for me in his portfolio, but it's okay. Owning Google, Facebook, Apple, it's not that much of a surprise. Those companies are still pretty much value hidden in plain sight. And I would say that Li Lu would sort of be a bellwether to start to evaluate whether or not those companies are deteriorating or they are far exceeding their or reaching their intrinsic value. If we see sales from Li Lu in those positions, then if you're an owner in those companies, it's probably a good time to take a look and reevaluate whether or not you think those companies are still worth holding. Li Lu selling something is not a call to sell the position yourself, but it's always a nice reminder to say, hey, Li Lu thinks something. Let me prove him wrong with my own thesis, or listen to him if I'm wrong. But the big change for Li Lu is he bought a pretty sizable chunk of Berkshire Hathaway stock. To me, Berkshire seems like it's a great place to park money if you want to own a company that has obviously the best capital allocator in the world in Warren Buffett, that's likely to at least match the S&P over time. But one thing Berkshire is doing is they're buying back a lot of shares. Of course, they have a huge cash position. Berkshire will never pay a dividend, but one thing they are doing to try to return value to the shareholders is buy back their own shares. One implication of that is that Warren and Charlie both think that Berkshire Hathaway is undervalued enough. It's far away enough from its intrinsic value that they're willing to spend billions of dollars buying back their shares. And Li Lu certainly seems to agree with them. He has $245 million in Berkshire Hathaway. Now, other than the fact that Li Lu probably thinks the company is undervalued right now, it's hard to say exactly why he purchased Berkshire. In a time of frothy valuations for software businesses and other tech companies, he's putting a pretty sizable chunk of his portfolio into what we might call an old economy, hard asset conglomerate. I'd like to think that as a small retail investor, I can find better returns in opportunities other than Berkshire Hathaway, but it's often stupid to ignore what Li Lu does, but I'm sure there is value to be had studying why Li Lu thinks that Berkshire Hathaway is undervalued. It's not at the top of my list of companies to look into right now, but obviously the association with Warren and Charlie and now Li Lu in Berkshire Hathaway, it's maybe not a bad idea to have Berkshire as some core holding, not as an alternative to cash. I know Monish Pabrai in the past has discussed, he might have discussed it in Dondo Investor, that he held Berkshire Hathaway as an alternative to cash, which is kind of a silly idea because Berkshire is not immune from going down. But in any case, understanding one of the greatest companies in the history of American capitalism in Berkshire Hathaway is probably not a wasted effort, regardless of whether or not you're going to invest in it. So minimal changes for Li Lu with one surprising new position. Let me know if you all have any insight about why Li Lu might have purchased Berkshire Hathaway. All right, now let's hop on over to Appaloosa Management, which is run by David Tepper. In a recent interview, I saw Tepper say that lately, he has been maybe too pessimistic, and that would be reflected in the past couple quarters of him selling pretty heavily in all of his positions across the board. But as you can tell by all the red here on his portfolio, it looks like he hasn't let up too much with that idea that he wants to sell. Tepper has a lot of positions. The ticker lists 48 positions, but many of them are concentrated, and many of them are these large tech giants. We see Alphabet, which pretty much went unchanged. Meta, which was Facebook. He sold about 5%, but that still makes up almost 10% of this portfolio. Another US giants in T-Mobile and Amazon. Now this is surprising. He sold 44% of his stake in Amazon, and it still remains 5.5% of his portfolio. If we look on Dataroma, Amazon is one of these positions that is owned by a ton of super investors. I'm not too familiar with these guys who've been selling out: Viking Global, Edgerton Capital, and Lone Pine Capital. Bill Miller, Amazon is one of the biggest positions for his portfolio, and he's trimmed that by about 10%. But as we can see, there are a ton of investors holding steady or even adding to Amazon. And in the case of Terry Smith, he initiated a new position in this company. So in the value world, Amazon is a pretty big deal. But the fact that he sold 44% and it still makes up about 6% of his portfolio shows how large of a position that actually was for him. He added about 16.33% to Occidental Petroleum. He bought that from anywhere from a range of 32 to a low of 21. So if he bottom ticked this here and held it through the end of September, he has already made a pretty reasonable gain on that pretty large position for his portfolio. Now here, this always hurts me a little bit. Tepper has been selling Micron for many quarters in a row. Here he sold another additional 50% of his total stake. And again, it still makes up a little under 5% of his portfolio. If we contrast that with Monish Pabrai and Li Lu, who both have huge percentages of their portfolios dedicated to Micron and haven't touched it. And in Pabrei's case, he's added a few percentage points here and there to his position. This one kind of surprises me. And I think Tepper is the investor that Pabrei actually got the idea for Micron from. So it's slightly concerning to see him sell such a huge portion, but again, it still makes up a decent size in his portfolio. And here we come to a pretty interesting one with Macy's, which by any stretch of the imagination doesn't sound like a sexy business that you might want to invest in. But here we saw in this past quarter, Tepper he almost doubled his position with about a 94% increase in his stake. So now Macy's sits just under 4% of his total portfolio. And I would assume that this isn't going to be at this top spot for very long. So this is the chart for the past 6 months for Macy's. It looks like he bought it at the end of June or the beginning of July. The shares were trading around almost $19 per share. And no matter which way you slice it, it is very likely he's made a sizable gain on this. And even going into the fourth quarter of this year, we can see that this share has shot up to almost a high of $38 per share. Now, this is what a savvy investor looks like. Straight exponential growth within 2 quarters. Now, that's pretty rare. But again, this is a great reminder that even today, it does not require us to invest in companies that are trading at 100 times revenues that are cash flow negative to make money with the market. I don't know if it's too late for this Macy's investment or what exactly is going on there, because as far as I'm concerned, it's basically a dying retail behemoth. So that would take some diving deeper into to understand. Maybe he's looking at the assets that the company has, if maybe it's changing to a more software focused business, possibly rewiring their e-commerce piping and their logistics and things of that nature. I don't know. Those are all complete speculation, but you look for opportunities and it may not be apparent just based on the industry. And as Warren Buffett says, sometimes the less sexy the business, the better of an investment opportunity it can be. So I don't know if Macy's is a wonderful business, but it's trading for a less than a 13 PE ratio. It has a pretty decent dividend at a 1.76% yield, and the market cap is still relatively small, sitting at less than $11 billion. So maybe there is something worth diving into with Macy's. Let me know if you want me to check that out in more detail in another video. It's positions like this that leave me in awe with these investors like David Tepper. How does he know what he knows? And well, what does he actually know? It just astounds me that they can find these opportunities. And it's a shame we can only see their portfolio changes 4 times a year. All right, let's hop on over to Greg Alexander's portfolio, which is Conifer Management. Now, this is one of the investors that Warren Buffett has named, along with Lilu and Seth Klarman, as one of the 3 investors that he would let actually run his money if he needed to. So that's really high praise. Greg Alexander was sort of in the news during the last quarter for value investors because of his purchase of Alibaba. And I couldn't go a video without giving Alibaba some love. So in this quarter, he actually added again to his position in Alibaba. In these listed shares, his largest position is Delivery Hero. He sold almost 23% of those shares. He still owns 3% of that company. His second largest holding is Stellantis, which used to be Fiat Chrysler. He sold a little bit of that, but it still makes up a sizable 10% of his portfolio. Now here, Alibaba continues to increase in the ranks for his portfolio. He added another 400,000 shares, bringing the total changes in shares held up to 28.5%. So this is almost a 10% bet for this portfolio. Now that is in stark contrast with what we saw Mohnish Pabrai do this quarter, which was sell almost 78% of his shares in Alibaba. Now, it's not entirely clear what's going on there with Pabrai. He was such a bull on Baba previously, so not really sure what to make of that. I did try to get some of my thoughts out on Pabrai's moves with Alibaba here. So a manager that had worked at Sequoia for over a decade, that is revered by Warren Buffett, has continued to add to his position in pretty sizable chunks in Alibaba. That matches more of what investors like Charlie Munger are doing. So I would anticipate that this position is going to be here for a long time. And if you are disheartened by the fact that Pabrai is probably selling out of Alibaba, then check out Greg Alexander. He also has about a 3% bet in JD.com, which is another giant in China. So he's certainly not afraid to invest in China, which is interesting. Yeah, as we get smaller and smaller, things get less interesting. But the big change for Greg Alexander is this addition to Alibaba. Okay, that's all the coverage I had for this video. If you're based in the United States, then happy Thanksgiving to you. Otherwise, I hope you all have a great week. If you liked this video, you may want to check out this video over here covering Monis Prabrai's investment thesis for 10 cents. Please like the video and subscribe to the channel for more. Thank you so much for your time. Thank you for watching this all the way to the end, and I will see you in the next one.